If you're wondering how much money you can take out of your IRA, your 401k, or anything that's tax deferred, so when you pull money out, you'll have to pay taxes on it, you better get familiar with the IRMAA, the Medicare IRMAA brackets. There's 5 different levels. Now, Medicare is based on how much you earned 2 years ago. So for people getting ready to go on Medicare in 2025, this chart, we're looking at their adjusted gross income for 2023. So pull out your tax returns. If 2023, you're an individual and you made under $106,000, you paid the same amount that most people will pay for Medicare Part B, which is $185 a month. If you're a couple, you filed your taxes jointly and you made under $212,000, pay the same amount as everybody else. What if you're $1 over this amount? You're $1 over $106,000. You're $1 over $212,000 as a couple. You can't change this because this is what happened 2 years ago. Then you will be in the first level of the Medicare IRMAA brackets, meaning you pay about $80 more a month, every month for 1 year for Medicare Part B, and you pay about $14 more a month, every month for Medicare Part D. That's if you're $1 over. Medicare IRMAA is a cliff. So there's 5 different brackets. They can change this. There used to be 3 brackets and they added some more and they could add more in the future. But for right now, if you make over, let's go down here. You make over $200,001 as an individual, double that for a couple, over $400,001 as a couple 2 years ago, you're going to pay an extra $406 a month for Part B. You're going to pay an extra, because you might not have a premium on your Part D. So you'll pay an IRMAA surcharge of almost $80 a month for your Part D. So what is that all together? $500 extra a month. If you and your spouse are both drawing that, it's an extra $1,000 a month, an extra $12,000 a year. It's a lot of money. So if you're just getting ready to go on Medicare now, and you are working making this income, no problem. If you're going to go on Medicare now and retire and not make this income, you'll file an appeal. Our office can help you with that, and you won't have to deal with IRMAA. But if your income was so high 2 years ago, if you made the $400,000 2 years ago because you sold a farm, you sold a house, or you took money out of your 401k 2 years ago, you can't appeal any of those things. You will be paying this Medicare IRMAA for 1 year. So now let's talk about right now. You are getting ready to retire. This is not going to be a problem, but you want to sell a house. You want to sell a vacation property. You want to sell your business. You want to sell your business. Structure it. You don't have to get one lump sum payment. Maybe you structure that out over several years so that you can try to stay below these limits. Maybe it's not worth it and you're just like, I'll take the hit for 1 year. At least you understand approximately what the hit will be. So it could be an extra $12 grand a year that you pay in surcharges. Doesn't matter what insurance company you go with. The insurance company has to collect it and they have to send it back to the government. This IRMAA Part B goes back into the Part B trust fund. So yeah, if I get a drug plan over here that costs $0 a month, there's plans like that this year. They're going to charge you the extra whatever it is. In this last scenario was extra $80. The drug company doesn't keep it. The insurance company doesn't keep it. They have to give that back to the government. So you can't escape a Medicare Part D surcharge by having a 0 premium or a low premium drug plan. You can only escape it if you don't have a drug plan. Now, maybe if you get your drugs through the VA, TRICARE, Federal Employee, Indian Health Services, not a problem. But if you just didn't have a drug plan this year because you didn't want to get hit with the IRMAA, now you're going to have to contend with the late penalty because you didn't have a drug plan and you didn't have credible coverage. So that's not necessarily the answer. Some people look at this and they go, oh man, I did sell my business 2 years ago, or I did sell my house, or I inherited a house from my parents that I sold, or whatever that caused their income to go up. So instead of retiring this year, where they will get hit with this Medicare IRMAA surcharge, they just delay a year, right? Because it's always looking back 2 years in a rear. They just work for another year so that this can expire and then they retire. Nobody wants to hear that. When you want to retire, you want to retire. But if you're going to pay an extra, like I said, the worst case scenario here would be you would pay an extra $500, $443 for Medicare Part B, and an extra $85. So like I said, $6,000 a year, 12 grand if you're both on Medicare. What if the income's all my husband's? Like I only made my Social Security. I got 25,000. Yeah, but you filed your taxes jointly. You're on Medicare. So you're both going to get hit with it for 1 year. So if you're going to do stuff in the future into retirement, before you do something that will cause your income to skyrocket, such as taking a large withdrawal out of your 401k, out of your IRA, 403b, such as selling a vacation property, selling a farm, selling your business, look at the Medicare IRMAA charts. Work with an accountant or a financial planner that's familiar with Medicare IRMAA, and I will tell you right now, not a lot of them are. If you have more questions about Medicare IRMAA, go to our website, themedicarefamily.com. We have a lot of great information that can help you. If you like this video, you might really like this video. Check it out. And we'd appreciate if you subscribe to our channel so you never miss a great video. We put out one every week. Check in the description below this video for a link to our cheat sheet on Social Security and Medicare. And you can also give us a comment if you have a specific question. Always feel free to call us or email us at the Medicare Family.